we might be living through the last great wealth transfer. The window to generational wealth might be closing forever. And I'm gonna explain in this video. Welcome to the Freedom Culture. Here at the Freedom Culture, I like to discuss current events in the financial sector, this new digital economy, and breaking down blockchain technology in the most understandable terms possible. I'm gonna get straight into it. To lead to my point, we're gonna have to check the history. Throughout time, there's been moments where the way money moved changed. For example, in ancient times, during the Tang Dynasty, we seen the introduction of paper money. And the people who benefited were the merchants who adopted that system early, and they dominated the Silk Road. And it's a strikingly similar pattern to the early days of Bitcoin when it dominated the anonymous dark marketplace, also called the Silk Road.
The merchant stares at his problem. A fortune in coins, so heavy his horse can't carry them. It's Song China, early 1000s. Trade is booming, but money is breaking backs. Buying a house means hauling wagons of copper. So, merchants improvise. They leave their coins with trusted shopkeepers and walk away with a simple receipt. Soon, these receipts start circulating. Merchants pass them to other merchants, stall to stall, town to town. At first, they're only promises, placeholders waiting to be cashed for real coins. But then, people stop cashing them at all. Why bother with heavy coins when the paper itself was accepted everywhere? The emperor caught on. He realizes he doesn't need to spend on mining and minting all that metal anymore. He can simply print paper. And so, the world's first banknotes are born. Everyone must accept that this paper is now money. From that day on, money was no longer a limited supply of precious metals, but endless prints of worthless paper.
Another example is the creation of SWIFT, which transformed global banking to what we know of today. And the people who benefited were the large international banks that plugged into the network early. Those that took advantage and thrived were JP Morgan, Citibank, HSBC, Barclays. History and current times relate to what's called the fourth turning, which describes a crisis-driven realignment. It's a theory where outdated systems break down and rebuild. We are now at what's said to be the final phase of society's repeating cycles.
You think that we are in that sort of fourth turning?
They argue that roughly every 80 years or so this happens. Basically, it's like the fourth generation. So it's like just long enough that they're the generation that wasn't really around during the prior crisis. And it could be changed for the worse, it could be changed for the better, but that period of change is always disruptive. When you look at the long-term debt cycle, it matches up with the fourth turnings. Or historically, that's been the case for these modern fourth turnings, the last three or so. And that period of currency itself or money itself going through a transformation is inherently kind of a fourth turning type of environment. So I generally do view us as being in this kind of strong fork in the road moment where things that kind of happen over the next 5, 10, 15 years are going to ripple through the next century. This is kind of like the era where we see kind of what institutions arise, which forces win, and what kind of sets the playbook for the next period.
Today, with all this competition between payment systems, banks are worried about losing business. For example, if my bank starts charging maintenance fees like they are now, I'm just going to take my business to an online bank or stablecoins. If my money takes too long to clear an account, I got to wait past a weekend or a holiday, I'm just going to go to a faster option like stablecoins. See, nobody waited for taxis to modernize when Uber became an option. We just went there. So this all adds to the reason why they signed a bill to modernize payments to and from America's bank accounts. Here's a clip of Larry Fink and Brian Armstrong speaking on this shift.
Underlying all of this has to be lots of treasuries, which a lot of the banks, one of the reasons I think banks have been frustrated or anxious about some of this has been the idea that there's going to be a flight of capital effectively out of the banks that's going to go to effectively support the stablecoin business, which ultimately will support in large part some of the transactional issues and potentially even some of the tokenization projects.
Well, in that case, I think that's just the banks trying to protect their profit margin. I mean, they should have to pay rewards and higher rates to their own customers. And I think they're trying to put their thumb on the scale of regulatory capture, essentially, to prevent crypto from doing that. But my prediction is actually the banks are going to start, we're already seeing this actually, they're going to be increasingly embracing stablecoins. And my guess is that in a year or two, they'll come back and say, actually, We want to be able to pay interest and yield on stable coins in our own companies. And so it goes back to that innovator's dilemma situation. I mean, the best banks are leaning into this as an opportunity, and the ones who are fighting it are going to get left behind.
I would just say, as a country, we're late.
How does the company Ripple securing that banking license all tie in with the idea that this might be our last great wealth transfer of our lifetime? XRP's final squeeze, where the window to generational wealth might be closing for good. If you understand what's happening with regulations and this new financial infrastructure, you would position yourself before markets gets fixed for good. The high risk, high reward volatility were opportunities to capitalize from. What's coming is stability. No more moonshots like what we see today. It's important to take advantage of these huge potential profits before algorithmic regulation comes in and flattens everything out. Algorithmic regulation is when AI and automated systems enforce market rules in real time. You're competing with sophisticated machines. By the company Ripple being today a regulated bank, crypto stops being the Wild West and starts playing by actual financial rules. Instead of price swings driven by hype and speculations, you get real institutions moving real money through supervised channels with clear protection rules. This is a new financial system still under construction, from speculation to realization. It's like supporting a Kickstarter before it becomes Amazon. Think about buying Amazon stock in 1997 versus today. Back then, it was $18, chaotic. No one knew online shopping would even survive. And today, it's $180, stable, institutional. That volatility was the opportunity. Ripple becoming a regulated trust bank is a signal that crypto is moving from chaos to supervised infrastructure. This is the moment before finance gets automated, regulated, and really boring. Once it's fully regulated, AI will be auto-policing every trade. You're just buying blue chip stocks at blue chip prices at that time. Ripple became a federal trust bank with direct Federal Reserve access. It's no longer just a crypto company working with banks. They now became an actual, literal, regulated financial institution plugged straight into the Fed payment system. That means Ripple can now legally custody assets, handle settlements, and use XRP as a supervised payment infrastructure under federal oversight. It's no more just a speculative token that people trade. It's like when Apple Pay first launched and your bank didn't support Apple Pay right away, but once Apple got certified and your bank plugged into Apple's system, now you're tapping your phone at Starbucks like it's nothing. This regulatory approval, banking infrastructure, Fed integration, stablecoin growth, and institutional money all flowing in at the same time is exactly what a great wealth transfer looks like before everything gets priced in and flattened out.
Let's go into the future. What are some of the mega trends that are going to reshape investing, asset management as you look forward?
I mean, there's two, but they're all interconnected, and that's going to be AI and tokenization of financial assets. So digital assets, those are the two mega trends that are going to totally reshape financial services. I had a lunch today with a very prominent former finance minister, central bank, very prominent guy. And he wrote a big paper on tokenization.
Right.
And he would say, he couldn't say it in his former role, but he would say it today as a private citizen. The banking system is being left behind in so many ways through technology.
This is the fourth industrial revolution that I've been talking about on this channel for over 8 years now. It's basically here. 2026 started off really aggressive. I feel like we'll be lucky to seize any window of opportunity that we have today, because in the future it's going to be a lot more difficult. AI is already automating trading faster than any human can even react. Pretty soon, your earnings is going to be dependent to whatever the algorithm decides. So it's important to lock in now. For example, I know of a YouTuber that used to make like 10 million views per video, but ever since AI has been making it a lot more easier to generate videos and you could just upload it on YouTube, it's been taking up the market cap, and his videos dropped from like 10 million to like 4 million, nearly 50%. So that's just another example of the impact that this is having. So lock in. It's exactly what I'm doing. Riding the wave of this digital finance craze. There's some projects out there that I got my eyes on that shows a lot of opportunity, a lot of potential. Some emerging markets. Through cause and effect, there'll be a market regardless. Some opportunities out there that a lot of people aren't even aware of. Lock in with me. I can support you through all this. Click the links below. Peace, respect, love, take care of yourself. Later.